Hello, Dennis Carr here with Forex Club's Market Review, week December the 10th to the 14th. The dollar saw fresh gains over the week. Tuesday's FOMC meeting was the big story. Many traders had been anticipating a 50 basis point cut. However, the Fed only cut by 25, and, as we forecast last week, the dollar found fresh support on this news. The week also saw news that could well influence future Fed policy. Both Thursday's producer price index and Friday's consumer price index were up significantly. The core figures, which exclude fuel and food, also rose more than forecast. This all points to inflationary pressures and confirms the Fed's hesitations to cut rates too aggressively. Over on the Chicago Board of Trade, traders have reduced bets on Fed rate cuts, and the chances that the Fed will cut their benchmark rate by another 50 points in the next 3 months are much reduced. Thursday's higher than expected retail sales figures also bolstered the dollar by allaying concerns that the housing crisis and credit turmoil will curb economic growth. The dollar was further helped by the announcement of a coordinated central bank initiative to alleviate the credit squeeze. Take a look at last week's euro-dollar chart to see the impact of this news. All in all, things don't look too bad for the US economy for the time being, and traders felt encouraged to buy the buck across the board. The jury is still out as to whether the US will avoid recession next year, with some respected commentators warning of stagflation. That's a combination of recession and inflation. Alan Greenspan said that the economy was reaching stall speed, with a 50% chance of recession in 2008. Whatever, we think that it's safe to say that the global bear trend on the US dollar is not yet over. Before moving on to next week's forecast, let's take a look at last week's. It has to be said that we were well out on our resistance levels for the European currencies. However, in our defense, we did say to avoid taking aggressive positions before Tuesday's Fed statement, and by the end of the week, both pairs had dropped to our support levels. The yen ran true to our pronouncements, with Friday finding the pair at 113.45. The UK economy is in a pretty bad way, it seems, and we think sterling dollar will be the weakest pair. We expect some respite at the beginning of the week, with highs at the 203.20 to 30 range. However, we forecast a drop to the 198.90 mark as the week progresses. Euro dollar should trade within 143.90 to 145.20, with dollar yen trading up to around 113.75 to 114. That's all we have time for this week, folks. Have a great week.